Alright, first things first. Spain's going to get a bailout, which, I mean, we've already discussed this a million times. Up to or around 100 billion, and markets like it over there. And then, like within minutes or just no time, markets don't like it anymore, which is the normal reaction you would expect. While analysts have been making a big deal about the bank bailout in Spain this morning, it is important not to forget about Europe's next biggest problem. Italy! No. Yields on Italian government bonds, the interest rate, are shooting through the roof today, as investors wonder how much stronger Italy's banks are than Spain's. In either case, it would appear they believe that the bailout has divorced financial sector stress from that on the government. The Italian FTSE MIB has also lost all of its earlier gains. I guess basically the stock market over there. Now down 0.6%. That was earlier. So the 10-year Italian bonds up 23 basis points so far. How's that look for you? See that little 6% at the top? It's almost touching. As I said it with Spain, as I said it with Greece, Portugal, everybody else, that is the point of no return. When that happens even once, you already know the country's in trouble. Then the governments come in, end up buying the debt, or in this case the ECB, European Central Bank, etc., will come in and start buying up the debt, not telling any of us that we're actually the ones buying all the bonds so that the yield stays under 6%. They're not going to tell us that, but that's the case. And having said that, now that Italy's in the crosshairs, along with Spain and everybody else, gold imports by mainland China from Hong Kong climbed 65% to a record in April, advancing for a third straight month as investors sought a hedge against financial market turmoil and economic slowdown. Shipments total 100, well, that's kilograms, or 103 metric tons in the month, from 63 tons basically in March, according to export data from Hong Kong. So Hong Kong knows what they're doing. China knows what the hell's going on. It is also why they are the only entity to have a direct window to the Federal Reserve and Treasury, actually the Treasury technically, where they can sell or buy bonds. Well, they already have tons of bonds worth upwards of $1 trillion plus. At one point it was $2 trillion. And as of sometime last year, they got a green light to do a direct transactions with the Treasury. Now, you don't suppose they wanted that so that they could buy a bunch more debt and just have this direct line of, you know, whatever, with the Treasury and Fed? Or do you suppose they don't want to upset global markets in China, in the USA, EU, all of them, if they report on the data of who bought all these bonds or who came out here and sold massive amounts of bonds? Oh, it was China. Okay, so the big guy in the room is telling everyone it's time to get out of US debt. They're getting out. And no one else is following suit, right? Or actually there is a few people following suit. Bottom line is, this direct communication or direct line of buying and purchasing with the Fed and the Treasury is the telltale sign for me, which I did a video on this a while back, by the way, not that long ago, that they have the direct ability to sell their bonds that they've had all this time back to the Treasury, so that when the US of A dollar takes a dive and we default on our debt, China will be holding very little of it as compared to in recent years and last year. Thank you.